they were trying to raise, I think, $100 million.
Okay. Wow.
Okay. And they're talking like BlackRock, the banks.
Right.
And it's all about
traditional
timeline.
way, right.
It's all about timeline, right? And so sometimes these organizations that are big are taking their time or they're just not able to meet the timeline and they're stuck. And sometimes they have to go to private equity just to meet like the first phase of that 100 million.
Yeah.
Right?
Right,
So
right.
they have the same issues. They're just
Interesting.
They're just amplified.
Welcome to the Millionaires Idea Vault Show, where we interview successful entrepreneurs for them to give away their best business idea. And together we workshop the idea live on the show. And we don't know what the idea is before they show up on the show.
Yeah. Oh, and one more thing. If you want to get the most out of the show, make sure you download all the documents prepared with the links below so you get access to the business plan, pitch decks, worksheets. Sounds good? See you in the show. Peace. Hey guys, welcome to the Millionaires Idea Vault Show. This is where abundant mindset entrepreneurs come together, and we have a special guest who will give away an incredible business idea that we'd love to run with, but for some weird reason, we chose not to.
Or we don't have the time
We
to.
don't have the time. Just maybe we're just not the right person, and we're gonna gift it to the world along with the playbook. And so, very excited, and we hope you get inspired by this idea. If not, check out the other shows because we got some other cool ideas as well. Today's special guest is Mr. Stephen Lau. Hello, Mr. Stephen Lau. He'll give a quick bio, but I like to say something is he's my former business partner of a few businesses, and now we partner on several other events and projects as well. So it's kind of cool to have this guy in my life. But he is really one of the main reasons why I've had the success I've had, and because he helps create products that are very easy to sell. So having Steve on the show is going to be incredible. So my boy Stephen, just give us a quick overview of who you are, and let's get rocking. Yeah.
Yeah. So I'm Stephen Lau, and I guess I'm kind of serial entrepreneur, I suppose. I focus within the web marketing space, and have had some successes and have sold some businesses in the past, and now I'm on the podcast sharing ideas that we've shelved or don't have time to work on. So
I can't wait. And just a little bit of background. I mean, I met Stephen like 15 years ago and then did not see Stephen until this week. So it's been a long time. I'm so happy we reconnected. We live in the same city.
Yeah.
And so I'm super excited about hearing the idea. I know Stephen's full of
and
good
Stephen
ideas.
also has had an impact on your business in a positive way. We don't
Very
get full
positive.
details.
Very
but,
positive. Yeah.
So this is kind of a little.
I didn't want
reunion.
to tell him yet. I didn't
yeah.
want to tell him because then he'll get,
I know. He might demand for commission of some sort.
where's my kickback?
Exactly. Oh, it didn't work out
We
that
know
well.
How you think, Stephen? But yeah, so Stephen, hit us up with kind of like the problem that you've noticed. We like to say, what is the kind of epic problem that you've identified through this that we're going to share, and then what is that solution?
So I think it's in the financial space.
Okay.
And it's a Canadian problem, right? It's very regulated. It's basically, it has to do with private equity. So what is private equity? So it's not a mutual fund, anything like this. It's where people are asking money from a private perspective, right? And so you might have seen some of these. Maybe you have had some friends. I've seen it all over Facebook. Maybe your friends are looking to build a property, and they're looking to friends and family to raise money. Mm-hmm. It's like, hey, Richard, I'm building this, condo unit, and I'm for X% return, you could invest, and in 3 years you get your money back, or whatever it is. And so that's allowed, by the way. I think is that you can raise money from friends and family, and because I know you, and you know me.
Yeah.
So it's like, presumably you're not going to screw me out of my money, and so that's allowed. The problem arises when Tuan comes in the fray. It's like, Stephen, what did you invest in? I invested in this, and suddenly you don't know Tuan, but you're collecting money from him, which you're not supposed to, right?
No, unless he's an accredited investor. There's some
Unless
rules.
he's an accredited investor. So
That's
Tuan
right.
would have to be a millionaire of some sort. He'd have to have whatever
I'm
it
not
is.
an accredited investor.
Right, like $1 million in the bank, make so much money a year, your house is secured, or whatever it is. And it's in place because it's private equity can be risky. Anything can happen. And so if you end up losing money, your investors, hopefully they're okay. They're not going to be like destitute. And so that's the purpose. So anyways, it's a very regulated field and whatnot. And I believe that the government has been kind of like making it easier for regular Canadians to participate in this. And so one of the things they've been doing is they've released like you're allowed through a crowdfunding platform, you're allowed to invest, $2,500.
Right.
Without,
is that the limit? Is that the limit? Or
that's
do you know what the limit is?
That's the limit for non-accredited investors, and so, so Richard, you're trying to build this condo, so you tell me about it in a bar and you show me your phone and I sign up and everything's done because you've gone through that process already. You've paid to go through this process to be able to collect money in that way, right? And then the next level is, I believe it's up to 10,000 or 11,000. It only requires it's a minor administration, and then 25,000 above that, then you're in that field where you have to get an exempt market dealer to help you, as an example. And so, and even at that, like 25,000 is still very low because, how much administration required for you to, for them to kind of collect money and, inform you and on a regular basis about what's happening and stuff like that, right? So anyway, so I believe that there's this opportunity or problem, whatever way you want to talk about it, is that how can the word get out more about this? So there's two types of audiences. One is like, how can we tell more people about the investment opportunities? And then how can we also attract people who are raising money to these opportunities as well, right? And also, at the end of the day is how do we make people aware that some things are not allowed, like not dealing with an accredited investor, as an example, when you're supposed to, right?
So so I understand the problem. The problem is like, how do you create scale if you're raising capital without needing to find accredited investors? Or how could you, as a not accredited investor, participate in these types of opportunities? So you touched on crowdfunding.
Yes.
So doesn't crowdfunding already solve that?
Well, I mean, what's a popular Canadian crowdfunding platform? There's not too many.
No.
Right?
What are some? I don't even know any. I never looked
Like
into this.
buyproperty.com as an example. So that one there is, at the moment, mainly related to real estate deals. And the real estate deals don't have to be Canadian. They could be American or whatever it is. The ones in the United States, if you take a look at some of them, they're more diverse. Like, so a wine company decides to do a new wine label or a new wine, and they want to get, investors involved in that process. All sorts of things, right? In this scenario, you're giving either shares of some sort. Like a Kickstarter, you're giving the product ahead of time that you buy. So you're investing in that product in a way, but you don't own any part of the company. In terms of the crowdfunding, in this case here, you'll own shares or something like that. So you're giving up shares for money or return for money or something like that.
So do you see it potentially being sort of similar, like this marketplace where non-accredited investors can invest up to $2,500 into?
Well, that marketplace already
projects?
exists. That marketplace already exists. It's just that I think it's just very fledgling, right? So at the end of the day, I think there's still a certain set of administration that still has to occur. Like you still need your lawyer, you still need your accountant. So you still need to get the Securities Commission needs to be involved, as an example. So all that paperwork resolving in your KYC documents, right, needs to get done. And so there may be facilities or these crowdfunding platforms may be able to do that at a rate that is very good, as an example, than the traditional, right? So today, as an example, if it costs you, $30,000 to $50,000 to get your paperwork, I mean, how much money are you trying to raise? You have to raise at least $500,000
to make it worthwhile. Right.
At least, just to make it worthwhile.
Right. Your administrative costs can't be more than 10% of
that's right.
the money
that's
you're
right.
raising. Yeah.
And then on an ongoing basis, if it's like 2 to 3 years that this is in the queue, then how are you reporting? So hopefully that can be done through the system, right? So it's not that, there's no cost burden on it, right? So if that's the case, then it can bring a new type of person who wants to raise money. So you might be starting a company, right, where you're building software. So could you have done this before, but now you know of this facility, could be an interesting scenario. And then even as the founder for this, you can get people involved.
So the business really is, I mean, I'm trying to break it down. Really, what the business opportunity is that you would become a broker between buyers and sellers, or people looking to raise money and people looking to invest. You have to be a broker, but you need to be automated enough that you could do it at scale at low cost. Right? So you're looking to raise capital, and you don't want to go down the path of finding accredited investors because it is a hard path.
Yeah, because what we're trying to
Right?
nail down is what is the business. Like we see the problem. So what?
Yes.
Where? If you were to start a business right now to solve that problem,
Yeah.
Yeah.
It's a brokerage that sits in between, a digital brokerage.
Yeah. So at the end of the day, I've been involved in this a little bit and ended up purchasing a domain name that I did not do anything with. So it's just sitting there. So it's called ExemptMarketDealer.ca.
okay.
ExemptMarketDealer.ca.
So that is the individual, that is the the profession that you need to go to if you're looking to raise money within the private equity space
From unaccredited investors.
from unaccredited investors. That is correct.
And there's a lot of unaccredited investors. And I would say I think the industry is more ready for something like this now than it was even 10 years ago. Like people are starting to become more comfortable investing in everything from, Bitcoin and, or all the way through to stocks. So if they can get in on the startup scene, I think there's a trust factor that needs to happen. So in my mind, it sounds like it's a brokerage. When I say broker, I don't mean like a big bank.
Yeah.
I mean, it could be like a website, right? But it has to be fair in that build the trust with both the investors and with the people looking to raise money,
Yes.
right? Because at that cost, right, we're talking about like raising $2,500 at a time. There's no room for like, hey, let's negotiate better terms or that. It has to be like, hey,
and it's
here's
less
the
than that.
valuation, right?
No, it's less than that. I mean, it's $2,500 is the maximum, but you
Right.
could put in $100.
$100
Exactly.
$100. That means the little guy can get involved and put in $100,
into 50 different companies, for
and they
example.
could maybe double their money.
yeah.
So you put in $100, and then you're going to come out with $200. But if it fails, then
You get nothing, right? Well,
right. But it's not going to put you in jeopardy,
No.
right? But
Well,
then,
you're doing investments just at the scale that is relative to your to
But
what
you're
you can
saying this
afford.
vehicle exists.
these vehicles exist right now, right? But the whole space, like any of these exempt market dealers, I mean, there's some sort of compliance officer within their network, within their company or whatever it is, right? So they're not allowed to say certain things, do certain things. But I'm wondering, say within the exempt market dealer space, maybe this website becomes kind of a media,
Right.
like a journal piece or whatever it is, that where it can go beyond and saying certain things in order to make these connections happen, as an example.
Right. Right.
I mean, I can relate to the business problem because when I think of like the businesses that I'm involved in, your options are private equity. When private equity looks at some of the smaller businesses I'm involved in, like let's say your revenue is under $1 million.
Yes.
A private equity firm is not interested because like the due diligence costs, all that stuff is just too high. Your other options like to go take money from a bank, and banks in Canada are very difficult to deal with, right? You've got like 5 options, unlike the US where there's like thousands of options.
Yeah.
And so this gives you a different sort of way to kind of say, hey, I have a new product I want to go to market with. I want to raise $500,000. It's not a huge amount of money. Now, who's interested, right? And then you can attract
Yeah.
kind of the type of people that would be
But I see
interested in
where
that
you're
kind of
going with
opportunity.
this. So it's highly regulated. So communication, all this is regulated. So,
Absolutely.
So really, your clients are these marketplaces.
The clients could be the
Combined
marketplaces.
with the investor.
Yeah, it could be. It's a marketplace for these marketplaces.
Exactly. Yeah,
It's also with the exempt market dealer. It's also with the investors, whether they're accredited or not. So, it's also the exposure for the clients of exempt market dealers as well, because they want their deals or whatever they're asking funding on, they want that to be exposed in some way.
yeah, to be discovered.
Yeah, in
And-
some cases they might not. It's like, no, this is really private. We're only looking. We don't even want people to know that we're raising money. Like you might have those
invite
individuals
only,
who-
for example.
invite only. Yeah. So, like one I know of is for Starlink. I mean, Starlink came to Canada. It was given to one of the larger exempt market dealer firms, and they didn't have to advertise it anywhere because it has a strong name as an
It's a
example.
brand already. Yeah.
It's a brand already. It's like, oh, I couldn't get into it, but now I can as a Canadian. So obviously, it's sold out very quickly.
Okay,
right?
so so here we are. I think we're good here. So
Yeah.
the clients, they have this mandate to raise money at the end of the day. These marketplaces, right? Where
Yes.
they have all these deals, they want to try to get money, but they can't only say certain things. So your solution here is kind of a way around that, and because of that, it's allowed for discoverability and more information, more education, all that stuff that you mentioned
Correct.
early on.
Correct.
Okay.
Yes.
So that's great. I think it's fantastic. I do think not only in this space, but there's so many regulated type businesses that are regulated need this type of solution. So that's pretty cool. How do you see the different phases to launch this, from phase one, like launch, I don't know, market fit, product, revenue, whatever, into a scale up mode? How do you envision those 3 phases?
Yeah. So I think first, obviously, there's a website, right?
Mm-hmm.
And I think there's a certain base of information should be on that website. Because even if you created that website, you might get calls the next day, as an example. So what are you going to do with that? Like, so some ecosystem needs to be established. You need to already have some players in the pool that are, the committed players in the pool that are like, I like the idea, and they might want their say, as an example, is like, and their say is not like maybe to benefit them exclusively, but to benefit the industry in general, maybe, right? So that could be leveraged. Maybe you even have, some government players in it, perhaps, that you can bounce stuff on into like what you're allowed to do and what you're not allowed to do. So I think maybe that's the first phase, because right now what's going to happen is I like the discoverability aspect of it, right? What will come of it, we don't know. You might have, a huge player come in, because you're right, Richard, you go to the bank, but a big problem as well is that you've gone to the bank and they've taken as much as they can, maybe billions of dollars already.
Right.
Now they still need private equity, because even in real estate, there might be soft costs, and soft costs might not be covered by the bank.
Right.
And so you need to raise that money, or you need to have that money already, right? So, and the other thing too is like, you might not be educated to ask the right questions either as an investor. So maybe this could be a place or hub that people go to. It would be interesting, and it might evolve as well. It might actually become a crowdfunding platform as well. Who knows? I'm not sure.
Right. So yeah.
No, I'm just thinking, like, to me, whatever the solution is needs to be almost agnostic and as fair as possible to try to find the right valuation for anybody who's looking to raise capital, and maybe give it a score, right? So to be able, because like as a non-accredited investors, I know a lot of people who want to invest and just they don't know enough. If I gave them financial statements, like they have no idea what to look at.
Yeah.
So this company needs to like simplify. And I'm thinking like Robin Hood style or Wealthsimple, like really simplify, to be able to simplify each opportunity to say, hey, you can invest in this. Here are the top 5 things you need to know. And we give this investment opportunity a score of 92 out of 100 or 62, just like based on risk factors, based on whatever, to simplify the way that you would show this information to a non-accredited investor to make a decision of investing.
So I think that would already be like a mature deal. Like it's already done, and there's a score in there, and maybe we make up this kind of scoring system for the general public. But what if it gets in an individual that's not even there yet? So could it be a marketplace for accountants, tax lawyers, right? Exempt market dealers, right? Other investors, as an example, that could hang out, right? Or be introduced. And all of those are potentially ways that a site like this could make money as well.
Right.
So let's talk about making money, because I think that's a part where we usually go early on in this, which is at this moment, if you were to guess, what is the revenue model for this business?
I don't know. That's why I'm here.
No, but I mean, you've touched on a few.
But there are many though. There's many.
Let's throw a few out there.
There's many. So subscription, right? That means you need to get value by paying a fee. But if you don't get value, then you're going to leave.
And who's subscribing? Who do you think are the subscribers? Both sides?
Both
The
sides.
marketplace, of course, and
Both
the
sides.
potential credit investors. Who's
That's right.
Okay.
And anyone servicing that realm, right? So maybe you're a startup, you come in here, it's like, wow, this is an easy way to raise money. Right? I can't get money from the bank or whatever it is, right? And I go to a lot of events where I present, and people want to get involved. Now it's very easy. I don't have to say I'll call you later during the week.
You say, here's my link.
Here's my link. You can invest as much as you want right now, as little as $100 to as much as $2,500, right? And then suddenly you've raised $50,000 by going to a show, right? And this is on the small level, right? But then at the same time, you may be a startup, but you might need other resources. Maybe you need writers, graphic designers, you need marketing help, you need business coaches, you need that kind of stuff, because it exposes. Remember, it could be a hub for all types of people looking for money.
Right. I mean, let's turn it into a real example, right?
Yeah.
Like let's use Shanty T as an example. Shanty wants to raise money. I come to the site. The site tells me like, oh, well, do you have the following documents ready? And I'm like, no.
Then there you
So
go.
then there's a marketplace
There's a
where you
marketplace
can
for that.
get a specific kind of like accountant who specializes in that sort of thing that can help you.
Yes.
So there's a fee there, and then this business can generate some percentage of that fee.
That's right.
Subscription is one way to do it.
Yes.
A percentage of the deal is another way to do it,
Yes.
right? A percentage of the deal in the form of equity is an interesting way to do it.
And they can
Higher
be
risk, but potentially higher reward.
You're right. There can be a lot of those things in
Yeah.
play, right? So, raising money is an art, right?
So how about as Shanty T, what model would you like the most as on your side?
Here's the thing. If I had a choice, I would like to be given a choice depending on the business I'm working with.
Yeah.
Right. But I'd like the website to say like, hey, you either pay us $100 a month or $50 a month to access our coaching program, essentially training program,
Yeah.
right? That helps you get ready for
A raise.
a raise. And you just pay a monthly fee, and that includes you being able to post and raise money. Or if you're tight on cash and you don't want to pay a monthly fee, we can take a percentage of the raise, right? Like we believe that we can help you get there. And depending on how much money it is, we'll take a percentage of the raise. It'll end up costing you more that way, maybe.
Yeah.
And then let people kind of decide.
Yeah. I mean, the crowdfunding platforms already take a percentage
Yeah.
of the raise. It's very little, right?
Right.
But there's money to be made in the preparation of your documents.
100%.
And so the number needs to be high enough because, well, there is the potential of this to be abused as well, right? So, part of the cost is due diligence. You could have someone come in here and suddenly get marketed, but they're just going to take your money, right? And so you got to be very careful. And of course, when that happens, it starts to tarnish everything.
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 That's why you need to have some sort of insurance or something like where you're protecting the investors.
Yes. And I think that even if this ever comes to fruition, it's like, I think there are going to be many people that won't like this.
Oh, for sure.
They won't like this, right? Because it just exposes this, because this is not general knowledge stuff,
No.
right? And so, but I think it should be from the perspective of an entrepreneur who's looking to raise money, because they need to know their options, right?
Yes.
What are their options right now? I go to the bank and I want to buy this restaurant. I go to the bank and they say do something, whatever it is, and then you're just like, okay, well, that doesn't work. Maybe I can apply for BDC, go for a loan, or whatever it is, and then they end up going to friends and family, but they don't know the rules about
That's right.
Yeah.
raising money in that way as well,
Yeah.
right? And then if they find out, maybe the cost is too much. So there is an education process, and I think even just that education piece itself, I think maybe many
a
willing
value.
people are willing to pay for it. In fact, establishing it also makes it so that it can be integrated into many programs. Maybe there's many startup organizations who help startups that can make this available, especially if it's an education piece. It would be
I'm curious if. Oh, sorry. You want?
No, I think the education piece is super important.
Yeah. I think I'm thinking about market penetration, right? So now, of course, we have the general idea,
yeah,
right? There's, of course, many different models, and I definitely would try to. How I would consider this is which audience is most desperate for a solution like this. Like I don't know, like if is Shanty Tea like a profile?
I would say
of-
small business owners definitely need an outlet like this.
right.
I agree that there's room for abuse, and you'd have to figure out that's a risk that would need to get flagged. Like you have to
But I
figure out
think
how
that's
to
part of the
manage
cost.
that.
That's already good. That's
small
that's good already.
businesses
But-
that are ready to.
But I think a business with revenue if your revenue is between $500,000 and $5 million,
okay, yeah,
up to $5 million, let's say, like somewhere in that range, it is very, very difficult today to raise capital.
Or even if you're a startup.
I think so. That's a good question, right? Like, is it true startup? Because that is a different category, I think, than the small businesses that sit between like 500 grand to say two to 5 million, right?
because startup almost feels like angel,
Yeah.
and then small businesses ready to scale from 5 million to 20 million. I feel that's more private equity play.
To me, I think that's a bigger gap in my experience, anyway.
Yes.
Right? A bigger gap is if you're between 500 grand to 5 million in revenue, it's very, very difficult to raise capital today, right? Unless you know the right person. But like private equity firms, they're not looking at you because you're too small. Banks, they're like, oh, the risk is too high. There's not enough leverage there. There's not enough whatever. Yeah. I think that is a gap that exists. On the flip side, for investors, I think investors would love to get access to some more interesting businesses instead of just
That's right. That's right. Because
everything's
we can-
available. Yeah.
Yeah, because I think like when you talk about making money, I think there's probably a lot of money to be made in just producing the documents.
Yeah.
Just because you have your document doesn't mean that anyone wants to invest in your company. But
That's right.
it's kind of like your first step.
You need it.
Without that thing, you don't know whether they're willing to invest. If you ask your friends, hey, if I have this company, would you be willing to invest in it? They'll say yes. But then your next question should be like, well, I have the paperwork right here. So are they lying or are they just telling to your face? Ultimately, you're challenging them right there, right? So I think that's probably the first step, right? And then if you go into this marketplace, then you should be confident that, hey, at least your friends invested properly. You should be able to raise some money, right?
Yeah.
And so, but like I said, I think the first part of this is working with the tax accountants, working with the lawyers to beat the market to see who wants to do this. Because I think there's a lot of startups. There's a lot of people that want to buy franchises, businesses. They need partners. Anyone who has trouble raising money, this becomes an interesting way to raise that money because presumably it could be a really cost-effective way to do it. And just one of the mechanisms. I'm not saying that you need to raise all your money using this mechanism.
Yeah.
I mean, you go to the bank, raise some money there. You have this, you raise some money there.
You've got your own money that you put in,
Yeah.
and then
I mean, startup. I mean, startup could be private equity too. So that's a correction for the audience. Just I'm just thinking, startup is good. There's a risk
Yes.
level for startup. When you have something like Shanty Tea, there's a bit of a different.
So just to build on what you're saying, I think phase one, I would do established businesses that are
Exactly.
small, because the risk profile of startup is so much higher, and I think you need more volume to be able to offset and to cover the risk associated with startups.
I don't think so. I don't think
You
so.
don't think so?
I don't think so because I think depending on what you choose, and I could be wrong, right? Depending on what you choose, I think, like as an example, how many people want to talk to people that are trying to raise money but just don't have the facility, right, to do it, right? So if you're in a startup, if you join a startup organization, how much time are they willing to invest in you? They probably want to, hey, there's this organization that specializes in just that. You can talk to them because they don't know. I mean, how many questions have to be answered like that every single day about people trying to raise money when they don't have money of their own, right? Imagine you come to this website and it's like, okay, the pay-to-play fee is $5,000.
Yeah.
Or $2,000 to start. That's your fee to get some answers, go the distance,
To
whatever.
get some templates, whatever. Yeah.
But what I'm not disagreeing. Like as a startup,
Yes.
it is very difficult to raise money. Where I think I don't know if this is what you're thinking. I'm thinking the people I'm serving here.
Yes.
And my job is to ensure they're successful by
Yes.
engaging my organization. And success means the business gets money to scale and the investor gets an ROI. And that's why I would penetrate with we're talking about go-to-market here. The idea is to serve all businesses who have trouble funding, but to create as quickly of a sustainable organization as possible is to create value that is realized by all parties, right?
Yes.
And so going with like a Shanty Tea, which is profitable, growing, and there's numbers that can back up, and now I know that if through my portal, there's an investment that I was able to facilitate, and in 2, 3, 4 years, I have a testimonial on both sides to say that we have created a promise to them and we've helped them realize it. I think that creates that momentum where we become a trusted source. And phase 2 could be the startups. As I mean, like the epic phase 1 is enter with, there's no such thing as zero risk, right? But more lower risk than a startup, I guess, right? And then, so that's where I'm thinking. Any thoughts, Richard?
Well, I think that, if this is done correctly, let's just say phase 1 is just, or before phase 1, you need to have your materials together, like something's launched already. So you've put up your hand and you're like, I'm doing this. But because you put up your hand doing that, people want to come to you. This because they need to raise money, because it's realizing their dream at the end of the day, realizing their project, right? And so there needs to be, I believe fees can be charged to answer some of these questions to start. And so I think that's, phase 1 revenue right there, just from fielding the questions or hooking them up with the right people. That's it.
Helping them understand what is needed.
That's right.
To do that. Yeah, they have no idea.
And I would say it's like, okay, that's one source of revenue, even still in phase 1. And then you're right, Tuan, also working with the very credible people. So again, approaching the exempt market dealer organizations, approaching the lawyers, approaching the accountants.
Very interesting. Okay, so it's starting to kind of flesh out for me.
Yeah.
So phase 1 of the project really is not, you're not connecting anybody. Phase 1 of the project is you're looking to raise some capital from unaccredited investors. You don't know where to start.
Or accredited investors.
Or accredited. You don't know where to start. You sign up to the service. It gives you access to the templates, the documents, access to some consultants that know how to help you get it together.
The steps,
it's
the pricing.
We will get you from like not knowing what to do to having a package that now you can go with and start raising capital yourself.
Well, maybe.
Right? Or we can connect you to a broker or whatever.
Yeah, I think maybe there's a cost to get that package.
Yeah.
And then from there, you then decide. And you can go to the marketplace to find these individuals.
That's the first step.
Yes.
The second step is the website. Now you take the revenue from that first step and you now evolve this website to be like, okay, now you can press a button and we will publish your opportunity on this website. And we have all these investors.
Oh, we can't publish that opportunity. No, we can't publish that
in a certain way.
Or maybe we can. Maybe we can.
In a certain way.
Maybe we can. In a certain way. We're not asking.
Pre-approved.
No one's asking for funding.
No. And we have access to all these pre-approved people that maybe are interested in investing. So now we can create a mechanism by which we can connect the potential investors and the sellers and the people raising capital.
Yeah, I mean it's kind of a stepping on maybe some other organizations' toes, like Founders Network or whatever it is, where they're trying to connect people, right? But this one here is related to raising capital. So if it connects people based on raising capital, that's interesting as well. I like the idea though. Is like there is already a marketplace for raising money, like these crowdfunding platforms.
Yeah.
So we don't want to step on their toes. But if it's a review on all the deals, whether they're getting funded, whether they're asking for money or whatever it is, then it's a marketplace of ideas.
Yeah,
exactly.
Right? And companies and projects and whatever it is. And your participation or membership, whatever, gets you at least just that. It's like a directory of deals, companies, that kind of stuff.
I hate to say this, but this is kind of one of the, this is going to be public here, but it's one of the thoughts I had about the back end of MIV show.
Right.
That's what we talked about.
Where we can connect everybody who wants to run with these ideas.
Yeah, remember I said we have a directory of accountants and all that stuff to help people who take an idea they see on our show.
So whoever decides to run with this specific idea, we could be a customer.
Exactly. That's exactly.
Yeah.
We could be a customer.
Yeah, so it's really, it's nice. It's a marketplace of potential deals and real deals too, right?
Yeah.
Depending on where it is. And if someone keeps it up to date, so maybe it's like, oh, it's kind of an idea. We're trying to raise the money for it, so it's not going yet. And then maybe there's a follow-up and it's like, okay, what happened now?
So it's fleshing out for me in that at first I thought the core problem was connecting the investors with the people looking to raise money. But now I'm starting to understand that the real problem here is helping someone who's looking to raise money to get ready to raise money. They don't know what they're allowed to do, what they're not allowed to do. They don't know what paperwork is required.
Yeah.
They don't know how to come up with a valuation. They don't know how to do any of that stuff. Right?
That's one angle.
And that's one potential
And
angle.
even, I don't have a business plan.
Right. How do you build one? Yeah.
Yeah.
Absolutely.
I mean, I think again, I'm all about, Richard knows this, I'm all about entering a market with a very specific need, problem, niche audience. And that's where I believe insane value can create. And even things when you said, oh, as long as they keep up to date. If we were niched and we were very focused on a very particular audience, those deals come to us. People ask to be published on our website. Do you know what I mean? And it's very noisy. So if you go to Kickstarter, Indiegogo, at least at once upon a time, I haven't seen it in 5 years, but if you look at their products, it turns out that it's, I won't give these aren't real numbers, but a large percentage are electronics and a large percentage are travel apparel, travel related apparel. That's the majority, right? They try to offer all sorts of products, but it self-niche itself down to these two because that's where the money was coming from. Right.
Yes.
Now, in same our case is, I do believe we still need to decide how we're going to enter the market because someone's going to convert faster. Someone's going to create the value quicker, whatever that value is. And now if I picture a phase three, and we are a client of this company, and I see this tool where 50,000 shanty tea type businesses are lined up to be part of this, right? Because the entire value offering connects a very specific type of investor with a very specific problem, with a very specific set of expectations.
Yeah.
And it serves that, right? Can we go beyond? Well, Kickstarter and Indiegogo tried, right? And if they're out there, I feel free to comment because I'd like the full details, but this is an outside observer, but they just can't leave. They can't go beyond electronics very much. They can't go beyond the travel, backpack, shoe industry. They haven't been able to go beyond that, right? Even though they've tried, right? But because they've created so much value and return on the specific. And I don't think it's a bad thing because they're making money.
Yeah, so it just kind of like led them there. They didn't kind of try to, or maybe they were trying to always move the needle somewhere else.
Yeah.
But they're going there.
So even going back to the first step is, this documentation support, but Shanty Tea is in a very specific position right now, very exciting, and I believe there's at least 50,000 of you that need just this little bit of support that's so you're overlooked by the banks and private equity. And this is a chance for you to actually scale and 3x your business.
Totally.
Right?
Yeah.
And that money could be used for sales and marketing, but it could be used to acquire another small business that is complementary, right? Like,
Well, no, it depends.
Yeah,
It depends.
it
Like
could
when
be
you come
anything.
when you go onto even these crowdfunding platforms or you're into private equity, it's very specific what you're using the money for.
Yeah.
So you can't just I'm just going to use it for this or
Yeah,
whatever
yeah.
it is, right? So, but because you have to specify because you're going to attain partners or there'll be shareholders, for that money that you're raising, right? But even when you were talking about these markets, I just thought, how about the inventors market? So many people invent things,
Yep.
right? Can you imagine if there was a place for them to socialize their invention in the first place? Because it's like, I want to raise money, but I'm also open to finding other partners and stuff like this. And
Right.
they socialize it enough and it's updated.
We have to table this for another show.
that's another business idea.
Yeah.
That's a great idea.
Because
actually.
I love this inventors market. I think it is also a much needed support, kind of like Milne and the artist market
Yeah.
about the whole gallery thing.
Yeah.
But I love this one too. Like I think we should table this. I'm writing
Totally.
it down right now.
Write it down. We'll have Stephen on again.
It's
for
a
that
good one. It's a really good
It's
one.
a good one because, for sure, they're trying to raise money.
Yeah.
Right? I mean, I got to see this one. This guy was inventing this wheelchair. Pretty neat. Has a competitor, but this one's very different, right? But it's like they were looking for money. That's why they met with me.
And I can
I
tell
know.
you for a fact that I've met a lot of inventors, and none of the inventors I've met are business-minded
No.
people, right? Like
No.
Yeah.
So this kind of thing. Okay, so I won't go down that path because
Yeah,
we'll leave
yeah.
it for another show.
Yeah.
But back to this problem, I absolutely believe it is a problem. I think there's need for it. And I think whoever is going to run with this sort of idea will have to figure out, based on their expertise, how they sort of figure out phase 1, phase 2, phase 3. But based on your thoughts, who do you think the right kind of person, right kind of candidate, background
slash team
team that would be able to kind of course, anybody can start this idea, but who would have an advantage in starting this kind of business?
Probably a lawyer. I would say like an entrepreneurial lawyer, as an example, or even and I wouldn't even say EMD. I think that like they would be hamstrung. I think, but the lawyer maybe or an accountant.
Right.
Yeah,
I like that.
Would be interesting. Yes.
And let's say you ran with this.
Yes.
What would your startup team look like? Whether it be consultants, employees, or partners?
Yes, and okay, so even when I said like a lawyer or accountant, because they entered into the marketplace, because they're owner of the company or came up with the idea, whatever, right? So if you're trying to engage other lawyers, they got to be a little bit more, transparent about what they're gaining out of this as well. It's not like, hey, I'm starting this so I get all the clients, so I have to be careful of that. So even if I was to do it myself, whoever's involved has to be like, okay, maybe, they got to outline their conflict of interest.
Yeah.
And then a resolution of that conflict of interest as an example. But otherwise, it will come up. Because everyone's going to be fighting. It's like, oh, why did you give that one over here? Or why is this over here? And so how do you resolve that? Is it more like a directory or something like this? It's like, oh, just use a directory, right?
Or bidding or whatever.
Bidding or whatever it is.
Yeah, but you know what? Like, all of those models can work. But eventually it'll start becoming like, hey, it's a franchise purchase. Well, this lawyer has a lot of experience with that, and this accountant team has a lot of. Oh, it's raising money for food and beverage, or for like it'll start to sort of like flesh itself out.
That's another market. You go to the franchise market, and then they're like, "Yeah, we got all these questions. So many people fill out the application, and maybe 80% of them are like, it doesn't go anywhere because there's not enough money. Maybe it's like, hey, they're going to just refer those over to this website as an example, or this entity." Right. So it's like someone's got to answer the question.
Yeah. I mean, that's a niche. Like I wrote that down. Food industry franchise in general. That's an option. I love the moment you brought this idea. I thought it's such a Stephen Lau idea because there's this huge digital discoverability web marketing component in it. And if you are a lawyer, you need someone like a Stephen also on the team. On the digital marketing side, and but that's why I was curious because if you're like Steven and you're this digital marketing wizard, then a lawyer is a great partner. Accountant, if you're an accountant starting this business, then like someone really strong with digital and web marketing and building web businesses should be a really good partner.
And I'm a huge fan. I know that Steven probably thinks this way too, but I'm a huge fan of using channels, especially in the early days, to kind of start, right? So like finding a partnership with a BDC that says, because you go to BDC even to borrow money, they're going to say like, hey, do you have your materials in place?
Of course.
And you want BDC to be able to say like, hey, these guys can help you get that material in place, right? Like, or banks, or these investors that not investors, the people who raise money for these companies, but brokers, I mean. So if you build that channel or those channels, you can kind of start getting more amplified exposure, I guess.
Yeah.
Yes.
Like I even think of, this is completely random as another, because more in my space, the content space, I know one or even two pretty serious content marketers. They own several franchise restaurants themselves, and yet, they're generating $10-15 million helping other franchise operators operate more efficiently, right? And that's a channel as well, through these kind of like thought leaders in the space.
Yes, I didn't mention this as well. Like there's an organic aspect to this as well. Depending on the product that is in phase 1, as an example, everyone that you get on board, whether it's going to be paid or free or whatever it is, they're now using the name. And so it gets a kind of an organic boost that way, right? So kind of interesting model too, and very popular in the, SaaS space,
Yeah.
right?
And how about like startup costs? How would you imagine this? How much would someone what's the most like the cheapest way to start this business?
Well, I think first, in my mind, anyways, I think it's a content play to begin with first,
Yeah.
right? So some amount, phase 0, some website, right? And then the next phase is just going out and making those relationships, right? And then after that, then it's released. Then I think it could morph into either some paid thing or whatever it is, because there's no shortage of people looking for money.
No.
Yeah.
That is like the moment that that's mentioned, I believe that there will be people that will be referring it over because they cannot or do not want to answer those questions.
Well, I mean, the thing that I like about this idea is like, I read in the news all the time about how there's so much cash on the sidelines looking to invest.
Yeah.
And then I meet all these small business owners who are like desperate to kind of raise some money to go to the next level.
Yes.
But matching those two is super, super hard, right? And that's what I really like about this idea, right?
Yes.
I would call it democratization of raising money, right? But
Yeah.
if you have a $20 million business, raising money is actually super easy because you're already in that bracket where investors are looking for it. You have the right network. But if you're on the smaller
No,
side,
that's not
you
true.
can't.
That's not true.
No?
No, that's not true at all. And I'm not going to mention any names.
Yeah.
But we came across one. They were trying to raise, I think, $100 million.
Okay. Wow.
Okay. And they're talking like BlackRock, the banks,
Right.
and it's all about
The traditional
timeline.
way, right.
It's all about timeline, right? And so sometimes these organizations that are big are taking their time, or they're just not able to meet the timeline and they're stuck. And sometimes they have to go to private equity just to meet like the first phase of that 100
Bridge.
million.
Yeah.
Right.
Right,
So
right.
they have the same issues. They're just
Interesting.
They're just amplified, right?
Okay, interesting.
So
I always imagined that it
different
was
level.
easier. Okay.
different level, right? So
That is true. We
timeline is important.
Yeah, yeah. We someone who will be on the show was looking at the mezzanine financing in between $100 million raise.
Yeah.
Yeah, some mezz. Yeah.
That's really interesting.
Like so many factors, your deadlines, whatever
Right.
it is, where do you have to give the payout, like stuff you can't, you cannot wait.
So we know there's a lot of cash on the sidelines.
Yeah.
And we know there's a lot of people looking to raise money, right?
Yes. Yes.
So we're trying to kind of over time bridge that gap.
And
That's
I want to
right.
bring it back to what I like about this also is that the content play hopefully will attract these smaller non-accredited investors. Say, hey, I can be part of something, because I think there's lots of cash on the sidelines that's there,
Yes.
but then there's a lot of cash that people don't even know can be available because the investors
I have
themselves,
a lot of friends that own small businesses too, that or that are own consulting companies, dentists, whatever, that have a lot of cash, and they invest 80% of it with their broker to invest in like secure investments, and then the rest is like in a trading account where they just want to have fun, right? They're like,
Yeah.
and it's like if you can tap into that market, that's a massive market to help you raise capital.
And you're talking about just, the 101 of investing, right?
Yeah.
So, because there's a problem today, how can you outpace inflation? Right? So some of the private equity stuff, I mean, it's risky, but it pays more.
Yeah.
So, general market might want access to that.
Yeah.
So this is a way to do it without endangering the nest egg.
Exactly.
So could be interesting. And then at some point in time, I mean, maybe they're a younger person, but sooner or later they're going to come into money. As an example, it's like, where are they going to go? What kind of relationship are they going to make? So, can this vehicle be that hub for that as you grow up with it? It could be.
It could be. Absolutely
Could be. It could
Yeah.
be. So if you create whatever that marketplace is, marketplace 3.0, whatever it is, whatever way you're trying to foster these relationships, I mean, maybe that is the key to success for this vehicle, right? And so ultimately starting it up, of course, create the vehicle, it's going to evolve, right? And then as well, it's about making those relationships. And they're going to be the early adopters on both sides or many sides. And maybe supporting those or not might be, the way to go.
Yeah, I think this is a fantastic problem and idea. I think, like Richard said, the timing is so good.
Yeah, I think the timing is right.
The need to outpace inflation is something we talk at home the last year easily.
You can't just put your money in the bank and earn 2%. I mean, it doesn't make sense.
No, you're losing money. Exactly.
You're losing money. You're losing money. So it doesn't make it's absolutely horrible.
And having access to potential startups or small businesses that could 10x your money is very difficult whenever you're not an accredited investor.
Yes.
Right? So you hear stories of like, oh yeah, he was one of the early investors in, I don't know, Facebook or whatever. It's like you can't get access to those types of investments. But through this kind of vehicle, you could potentially get access to invest in 10 small businesses looking to raise capital. And it gives the opportunity for those businesses to actually look for money in a clean way.
Yeah, and you have to understand too that the people that come into money could be very unsophisticated, because even as the baby boomers pass away, who's going to inherit that money? They're not necessarily the most savviest.
No.
Right? You'll have influencers also making great money all of a sudden. Where do you put it? Do they even understand the concept of investing? They might not.
Yeah.
So, and then if they really wanted to play, so maybe they do understand a little bit and they have like play money as an example. Where do I put it? I like to put it someplace, whether it's like, different types of projects. So,
But I mean, you've just identified a really strong market on the investor side. Is like, are you coming into a shit ton of money that you didn't have before? And by the way, whoever is dealing with these people, partner, channel, who's ever supporting these individuals, lawyer, accountant, right? This is who we're serving. This is who we're serving on the money side. On the business side, we're serving to start small businesses that are, $500,000 to $5 million. And just that's a clear message.
Yeah. And then eventually startups, franchise owner. I mean, the opportunity is endless. I just want to say big picture, long term. It would be super cool. Like, how they say like big, hairy, the BHAG, big, hairy, audacious goal.
Big hairy goals, yeah.
The audacious goal for this business in my mind is you create a ranking number that is a proprietary formula that essentially says this investment scores a 78 out of 100.
On risk kind of thing?
On risk and reward. Yeah. Right? And that becomes a number that the industry uses when they're assessing, right? When they're assessing these types of things.
Yeah.
Because that's how you simplify it for people who don't really have any investment knowledge, don't know how to read a financial report, right? You want to give them access to these opportunities by giving them like a really simple way to make a decision.
Yeah. And it's got to be, you can't manipulate that.
No.
Right?
No.
So, okay.
I love it.
Yeah,
I love it. Well, I think this is a great idea.
Ditto. I think this is a really good discussion.
And it spun off another great idea for another show.
Yep, agreed. Actually, there was like several, but the inventor was my favorite one. Yeah.
And
Awesome.
that's a mature space.
Yeah.
Right.
Well, thank you for sharing that idea, Stephen.
Okay.
One more question. If somebody decides to run with this idea, are you willing to give away that URL that you registered?
Sure. Of course.
There you go.
All right. Done.
There you go.
This is should have reversed done the show because we do have a series show thanks to Alexi here who's inspired us to form different series of show. But Let Go GoDaddy Day is when we go into people's GoDaddy account and we pick a URL and we're like, dude,
And turn that into a
turn that
business.
into the business. Yeah.
Oh, that's cool. That's cool.
Yeah.
So
We're
you're
gonna
gonna
do
let
that.
go of this
That's right.
URL, and then the audience, whoever is first to market and register a business, puts money down, can request for that URL transfer.
That's interesting.
Yeah. Love it.
Yeah.
Okay.
Awesome. Thank you so much. You want to close it off here, brother?
Yeah. No, thank you, Stephen. Awesome seeing you again. I love the idea. And I can't wait to have you on the show again to help us with the next idea that came up.
Mm-hmm.
So thanks for watching. I hope that you like these ideas and that you run with them.
All right.
All right.
Much love. Peace.
Much love.